I'm reading this title right now, and I'm hoping that's true, right? Like, can we get the inflation to cool down so the Fed doesn't have to get heavy-handed? The issue is they keep coming out with this, 75 basis points off the table, or 75 basis point is not necessary. They realize there's almost the way they talk about a 75 basis point hike is like it's a tool in of itself different than any other rate hike. And what's the difference if they raised, you know, 50 this month and 50 next month, and then we're at 100 basis point? Like, the 75 basis points really no different than 50 or 100. It's just a number. So it's like, what if they keep doing 50 points every month, or 75, 75? Like, they have to get money out of the system. That's what it comes down to. We printed an ungodly amount of money. If you look at the M2 money supply, there's so much money sloshing around. There was asset class bubbles everywhere. You're starting to see them pop. Cryptos were hammered. You saw equities getting hammered. They're still getting hammered. Housing market, sounds like you're coming next. They got to get some cash out of the system. How do you do that? Well, you can crash an economy, where everything gets devalued, right? That'll help. Or you suck money out of the system through interest rates. They get the interest rates up. The problem is, how do you go back to the 70s and 80s and how they had to get the money out of the system. You got to look at this time. We printed 6, 7, 8, 9 trillion, $10 trillion or more. How long is it going to take to get some of that money out? You're not going to do that with 25 basis points here or 50 basis points there. You will over a long period of time. So do you want to do this like slow thing, or do you want to just rip the Band-Aid off? They're trying to just finesse this whole thing and get this soft landing. So you might have to run where the rates are now for 4 years to get inflation to come down, or you bump rates up another couple points and you can get the same amount of money out of the system in, say, 2 years instead of 4 years. It's just, how fast do we want to get this over with? The higher rates, the faster they get the money out of the system, but that could also cause a recession. So this whole thought of you can't do 75. What's the matter? What if they kept doing 50-point raises for the next 10 months and interest rates went up 5%? Like, what is the difference? Like, the 75 basis point thing is not its own special tool. It's 25 basis points more than 50. It would probably send a message like, hey, we got some concern going on. All right, we've not done 50 in 50 basis points in 2 decades or something. As a while ago. So I get it. 75 is a little bit of a shocker, but maybe we need to get shocked. Like, things were just out of control. And then we got other issues that are, really screwing up the market. I saw there's like a diesel shortage now, and you got gas price issues, and that makes everything go up, right? We got a baby food shortage. We got these other things working against us on top of the amount of money in the system. It's like, man, let's just do the 75 point and get it over with. You might have to do it once or twice or 3 times. Did anyone not wake up? I've been doing episodes about this since last year. You've seen it happening before that. When all that money was printed, did anyone realize, like, when RVs sold out and ATVs sold out and cars and trucks were selling out and the housing market was booming and bikes were sold out for like a year and a half, everything that you wanted to buy that was kind of cool was sold out. Durable goods orders went through the roof. Did you not think that maybe we were in some kind of bubble? Excuse me, bad allergies. Yeah, the market booming, stocks are going up like 2,000 again. Like, why is this stock up 30%? I don't know why. Things like make no sense. And then here we are, because we never want to believe it's going to end. Sorry, I had to grab a drink. Damn, allergies drive me nuts. It's like we never want to just sit back and say, hey, this is what's going on right now, but it's not going to be this way forever. We don't want it to end. We don't want this to end. It was too good. People buying homes, crazy, wage increases. Like, things are good for some people, a lot of people, not so good for others. But it always comes to an end. The bubbles always get popped. This is a big goddamn bubble, and a lot of people are going to pay the price for it. So I hope this is true. I hope the inflation cools and we can get back to business. I'm about to do another episode on the effects of interest rates. What happens when you can just start getting 6 or 7% in your savings account, or like CDs for like a year or something? What happens when you say, you know what, it's just easier and safer to throw this money into a 12-month CD, and you're not buying equities anymore? No risk, 6 or 7% like it was in the 80s and 90s or whatever. I mean, all of a sudden, then you're not going to see the stock market going to the moon, because 6, 7% return is pretty safe and nice. All these things are going to start to shift, and then it's also, well, if rates are that, then car loans are going to be 8, 9, 10%. Mortgages are going to be high. We're going to buy less cars, less homes, or certain things just get less affordable because the interest rates are so high. So now I got to buy a used car because I can't afford to buy. I mean, you see pickup trucks sell out there for 50, 60, 70, $80,000. What are you going to do? 72 months at 9%? People aren't going to want to do that, so they're going to buy more used cars. There's going to be a lot of shifts going on if interest rates keep going up. So if you want the stock market to stay up, you don't want these interest rates going up, because all of a sudden 6% CDs don't sound so bad. So I'll do another episode on that in a minute. But I think we got a ways to go. We got a lot of issues going on, and there's a lot of money sloshing around. If the real estate bubble would have popped, I would have more hope. And it seems like it's slowing down, but it still seems like it's the wild, wild west out there. And you're seeing equities getting hammered. You're seeing a lot of these other bubbles starting to pop and kind of slow down. I need to see the real estate one before I have hope. It's there was like spec homes and properties I was looking at that were 1.5, and then they're all of a sudden selling for 2.8. Tell me that's not a bubble when you see stuff go up 40, 50, 60, 70% in like 12 months. Like, been there, done that, got the t-shirt. I've seen this story before. I've been alive long enough. I'm going to sit back and just play it safe. So anyways, if you have any thoughts, drop a comment below.